So the crypto market is bullish again, with Bitcoin going near 100,000 and altcoins following through. However, this momentum might not last. Here's why. Hey guys, welcome back to Republic Labs YouTube channel. In this video, we will talk about the current market condition and why in our opinion, the bullish momentum might not last. So, currently the crypto market has gone back up again, with the overall market cap reaching more than 3 trillion US dollars. Also, Bitcoin is bullish again, with its price reaching above 96,000 US dollars. Also, Ethereum is starting its momentum again, with its price reaching near 2,000 US dollars. Also, other altcoins are nearing its all-time high. For example, with Solana going above $150. The overall market seems to be bullish, with momentum and sentiments proving that the crypto market is positive again. However, in the short term, this bullish momentum might not last. This is because of a couple of sentiments, specifically macroeconomic sentiment. There are two upcoming sentiments that are coming today. It all comes from the US, where the first one is the non-farm payrolls data and the second one is the unemployment rate data. As you can see here, both will be published at the same time, and it is forecasted that both data will be bullish. However, since it's not published yet, the uncertainty is still strong, which means volatility might come to the market. Looking at the non-farm payrolls data, or the NFP data, as you can see here, in the previous month, we saw an increase from February to March, which is a significant increase. In the forecasted data for April, it is predicted that non-farm payrolls data will increase, which means that there are more job openings in the US, which is good for the US economy. However, when looking at the unemployment data, as you can see here, it is predicted that unemployment data will stagnate, which means the unemployment rate will be stuck at around 4.2%. However, the bad news is that, looking at previous months, in 2025, from January to March, the unemployment rate seems to be increasing, going from 4% in January, and then 4.1% in February, and then currently 4.2% in March. It is predicted that in April, the unemployment data will be the same as March. However, the previous forecast data stated the same. This means that there is a probability that in April, unemployment rate will increase, which is why it might cause uncertainty among investors and might cause volatility due to selling pressure. The selling pressure itself will come from investors keeping their money safe, which means during volatility, they might take out their investments to avoid the volatility itself. This is why both of these data might cause negative sentiment due to its not being aligned and showing uncertainty in the job market. This uncertainty will cause investors to not be sure of the US economy, which means it might impact the overall market, not only the crypto market, such as commodity and the stock market as well. Another reason why the bullish momentum might not last is because of the upcoming Fed interest rate decision coming next week. As you can see here, on May 7, 2025, the Federal Reserve, or the Central Bank of the United States, will decide their interest rate. This decision might impact the overall financial market, as this is huge in determining whether the market is bullish or bearish. This is because investors are waiting for a change in monetary policy, where investors are waiting for the Fed to be more dovish rather than currently hawkish. However, as you can see here, it is forecasted that the interest rate for this month might be the same as the interest rate for last month, which means there is no rate cut in sight. Also, this forecast is supported by the recent FOMC statement, which stated that currently the Fed is not yet dovish. However, it is leaning towards more dovish, but it is still hawkish. So overall, the market might not be as bullish as you might think, especially since the recent price surge is so significant. This usually means that whales and huge investors are waiting to sell, and data currently supports that. As you can see here from the look on chain data, we can see that institutional investors are selling through their Bitcoin ETF. The total transaction in the last 24 hours is negative, which means a lot of institutional investors are selling rather than buying. This can be a good sign of a potential selling pressure up ahead, especially since institutional investors has huge volume. Also, looking at the derivative data, traders are currently bearish. This is because, according to data from CoinGlass, there are currently more shorts than there are longs, which means traders are predicting that the market will go down. Looking at the liquidation heat map for Bitcoin, currently a strong resistance zone stands at around 98,000 US dollars. This is because there are a lot of volume predicted to be happening here, which means that when Bitcoin reaches this price, there might be a lot of selling pressure. Also, looking from a technical analysis perspective, as you can see here, 98,000 is a huge resistance zone, which means if Bitcoin broke above 98,000, there's a probability that the bullish momentum might continue. However, if it fails to break this resistance zone, then there is a probability for Bitcoin and the overall market to go down, breaking its current uptrend. So in our opinion, the market is currently bearish in the short term. However, looking at the sentiment in the market, it is pretty clear that the market is still bullish in the long term. So, all you need to do now is just manage your risk better and wait for the opportunity. However, these are not financial advice, as this is just our opinion, and all the risks are your own responsibility. Well, that's all the information I have today. If you guys like contents like this, don't forget to like, subscribe, and click that notification bell so you guys are notified when my next upload. Cheers, guys!